It may be noisy ahead of the UK vote, says our next guest. So how should gold investors position themselves? Joining us now is Kitco's Global Trading Director, Peter Hug. Peter, good to see you on Kitco's Gold Report.
It's nice to be back.
So Pete, let's take a look at gold, trying to hold 2065 here as we speak. Does Brexit need to pass to give room to the metal to move again?
Well, based on what I'm seeing in the market, right now the market is positioning itself that the UK will stay within the EU. So any surprise would be a UK exit. That is not, in my opinion, factored into the market and would have a pretty significant impact, at least in the short term, on the price of gold. So if the vote comes out that they want to leave the EU, I would suspect that we're going to see a $1,300 handle almost immediately.
Well, that leads me to my next question. Let's say if they do decide to leave, how ugly could things really get here on Friday, Peter?
Well, again, I think it'll be a knee-jerk reaction, and it could be, it could be significant. I mean, you could see $30, $50 on the gold price to the upside. And then I think people will, reevaluate and say, okay, so the UK wants to leave the EU. What does that mean? And, bear in mind that there's a 2-year time frame, should the vote come down as a leave vote, for them to, reorganize, how this is going to look going forward. So the first reaction, obviously, is going to be one of shock, and should have pretty negative implications for both equity markets in Europe and in North America, and money flowing into gold. So once the initial shock is over, whether that's a $30 or $50 pop in gold, people will evaluate and say, okay, so what does this actually mean? I think at that point the gold market will probably settle to some extent until there's some rational thought process put through as to what this means, and so then we'll have some sideways action. The first reaction, should they go, will be up, and I think up significantly.
So Peter, do you think gold's a safer bet now than the dollar, given that analysts expect a currency volatility post-Brexit here?
No, I think, ironically, I think if the Brits decide to leave the EU, you will have not only gold popping, but the dollar as well. So you'll have, I think, gold and the dollar moving in tandem as people look for safe haven, and the dollar still with yields considerably higher than those in Europe, and obviously higher than those in Japan, will attract capital. So, a yes vote to leave will benefit, in my opinion, both the dollar and gold.
All right, just to wrap and switching gears here, Peter, Fed Chair Janet Yellen was asked about the Fed's plans to unwind its balance sheet. She pushed back on the idea that the Fed will lose money as the central bank unwinds its $4.5 trillion balance sheet. Is this just typical Fed Chair talk here, Pete?
I think the Fed is almost an embarrassment. I think they've lost control. I think, and I've said this a number of times, and I hope I don't insult anyone, I think they should keep their mouths shut and let the data speak. And, they're indicating that data will determine what their move is going to be. So let the data speak. I mean, 2 weeks ago, pretty much everyone, including Yellen, was hawkish. And then last week, they turned right over. And in fact, the most hawkish of the Fed governors last week, presidents last week, indicated that interest rates may not rise until 2018. I think they've just lost control of how they're communicating, and that's creating uncertainty in the markets. I think they should just keep their mouths shut. And if the economic data substantiates it, when they have their next live meeting, raise rates or not. But this constant communication and bantering back and forth is, in my opinion, more disruptive than beneficial to the markets.
All right. Thanks, Peter. Thanks for your frank talk. Appreciate it. And we'll see you tomorrow on Kitco's Gold Report.